The current tech rivalry between the US and China didn't erupt overnight. It began in 2018, not with missiles or armies, but with a series of sweeping regulations and bold policy moves that would change the world of technology forever. The battleground wasn't a physical one, but a digital and economic front, where the stakes were nothing less than global dominance in the industries of tomorrow. The US government set its sights on Chinese tech giants ZTE and Huawei, two companies at the heart of China's technological ambitions. By cutting them off from vital American-made components and software, Washington sent a clear message: access to the world's most advanced technology would no longer be guaranteed. This sudden move sent shockwaves through Beijing. It exposed just how deeply China's booming tech sector depended on foreign, especially American technology, from microchips to operating systems. Chinese leaders quickly realized that their entire digital infrastructure, from smartphones to supercomputers, could be crippled by a single decision made thousands of miles away. The vulnerability was staggering, and the sense of urgency was immediate. For the US, the strategy was clear: slow China's rapid technological ascent and protect American leadership by restricting access to the most advanced microchips, software, and intellectual property. The hope was to maintain a decisive edge in critical sectors like artificial intelligence, 5G, and semiconductors. But instead of halting China's progress, these actions triggered a massive national mobilization. Factories ramped up production, engineers worked around the clock, and the government poured billions into research and development. China responded with an ambitious all-hands-on-deck campaign to build a self-sufficient tech ecosystem. The goal was no longer just to compete with the West, but to eliminate foreign dependencies altogether and secure its own future. The mission shifted from catching up to the West to achieving total technological independence. Chinese tech professionals, engineers, and policymakers united under a single vision: never again would China be held hostage by foreign technology. This decision would not only reshape China's economy, but also send ripples across the global landscape, altering the balance of power for decades to come. The world was now watching a new superpower rise, determined to chart its own course. What started as a targeted strike against a few companies quickly escalated into a full-blown confrontation, one that would define the future of technology, economics, and geopolitics. The tech war had officially begun, setting the stage for a fierce and unpredictable global rivalry. In response, China pivoted away from real estate and poured resources into technology and industry. The government mobilized capital and talent, producing more STEM graduates than almost any other nation. These engineers and scientists became the driving force behind China's quest for self-sufficiency. The real estate sector suffered, but new tech and industrial firms flourished. China's focus shifted from copying Western products to building world-class homegrown technology. Government support and fierce domestic competition fueled rapid innovation. Made in China began to mean cutting edge, not just cheap. The US restrictions meant to contain China instead unleashed a wave of national determination. China was now determined to define the industries of the 21st century. China's industrial transformation has been astonishingly fast. Massive investment and a flood of STEM talent allowed China to leapfrog up the value chain. In sectors like energy, China now leads in manufacturing turbines and exports them worldwide. In telecom, Chinese firms dominate global markets, especially in developing countries. The auto industry tells the same story. Chinese EV makers like BYD now rival or surpass Tesla in technology and price. This shift is challenging the West's long-held industrial dominance. China is no longer just assembling products, it's designing and building the tech of the future. From high-speed rail to advanced electronics, Made in China now signals innovation. The world must now reckon with a far more competitive global order. The industrial dragon is wide awake. The heart of the tech war is the semiconductor, the brain of modern electronics. The US tried to control chip design and manufacturing, restricting China's access to advanced GPUs. But these moves pushed China to accelerate its own semiconductor industry. American firms like Nvidia lost market share as Chinese companies turned to domestic alternatives. Meanwhile, TSMC in Taiwan surpassed Intel, making the world's most advanced chips, adding new geopolitical risks. China has even begun banning Nvidia chips in some sectors, signaling growing confidence in its own tech. The chip war is now a dynamic, unpredictable conflict. Both sides are racing to secure supply chains and technological leadership. The outcome remains uncertain, but the stakes have never been higher. The battle for the brains of technology is far from over. By late 2025, the US-China trade war has settled into an uneasy truce. The US realized China's dominance in rare earths gave Beijing powerful leverage. When China hinted at restricting these critical minerals, it caused panic in the US defense sector. Both sides recognized their vulnerabilities and quietly pulled back from escalation. The result, a fragile status quo, with each side shoring up its own supply chains. Open economic warfare has shifted to a subtler, long-term competition for influence. Recent deals, like the TikTok agreement, are more about saving face than strategy. The era of open hostility is over, replaced by a managed rivalry. Both superpowers now acknowledge their interdependence and the risks of full decoupling. The trade war's end marks the start of a new, more complex competition. One major consequence of the US-China rivalry is the rise of a new economic bloc: China, Russia, and India. This alliance isn't military, but economic, combining Russia's resources, China's manufacturing, and India's labor and markets. Russia supplies cheap energy, China provides goods and capital, and India offers a vast consumer base. Together, they form a closed-loop system, trading and growing independently of the West. This integration insulates them from Western sanctions and pressure. The Russia-China-India axis is building a parallel global system, challenging US dominance. The world is moving toward a multipolar order, with power more widely distributed than ever. In today's rapidly evolving world, energy isn't just a resource, it's the foundation of future technological dominance. The ability to harness vast amounts of affordable power is now the single most important factor shaping the next era of global competition. America's shale revolution once gave it a massive advantage, providing cheap energy that powered its factories and fueled a manufacturing boom. This era of abundant oil and gas helped the US become a global leader in industry and innovation. But now, a new energy alliance is emerging. China's deepening partnership with Russia is set to secure it the world's cheapest and most reliable energy supplies for decades to come, shifting the balance of power. The Power of Siberia 2 pipeline, a massive infrastructure project, will soon triple China's natural gas imports from Russia. What's more, these energy flows will be paid for in yuan, strengthening China's currency and economic influence. This steady stream of cheap energy will supercharge China's next wave of industrial growth and fuel its ambitions in artificial intelligence, automation, and advanced manufacturing. Training cutting-edge AI models demands enormous amounts of electricity. In this new era, access to cheap, reliable power is the ultimate competitive advantage for any nation hoping to lead in AI and high-tech innovation. As energy costs continue to rise in the United States and other Western countries, China's access to affordable Russian gas could fundamentally reshape the global technology landscape. In the race to dominate artificial intelligence, the nation with the lowest energy costs may ultimately have the upper hand, outpacing rivals in both speed and scale of innovation. China's strategic energy deals are positioning it to leap ahead of the West, giving its tech sector the fuel it needs to accelerate AI development and deployment on an unprecedented scale. Ultimately, the future of technology, and perhaps global power itself, may be decided by who controls the energy that powers the world's most advanced chips. Fears of a Chinese invasion of Taiwan have faded as practical realities set in. A full-scale invasion is unlikely, militarily complex and politically risky. Taiwan's political landscape is shifting, with pro-engagement parties gaining ground. Beijing appears to be waiting for a political opening, favoring economic integration over force. Rumors suggest a long-term deal could preserve the status quo for decades, followed by gradual integration. Such an agreement would remove a major geopolitical risk from the global economy. For TSMC, this could mean a massive boost in value as invasion fears subside. A credible peace deal would benefit all sides: stability for the US, eventual unification for China, and prosperity for Taiwan. The path forward is de-escalation, not conflict. The world may finally see a stable, peaceful Taiwan Strait. The rise of Chinese brands is dramatically reshaping global markets, challenging long-held assumptions about innovation and value. In just a few years, Chinese companies have moved from being imitators to true pioneers, setting trends that the rest of the world now follows. Western icons like Apple and Tesla are losing ground in China, not due to politics, but because local products are now better, more affordable, and tailored to Chinese consumers' needs. Chinese shoppers are increasingly choosing homegrown brands that offer cutting-edge features and superior value. Take BYD, for example. Their electric cars come packed with advanced technology, smart interiors, and impressive range, all at a fraction of a Tesla's price. BYD is not just competing, it's leading the charge in the global EV revolution, exporting cars to Europe, South America, and beyond. Huawei, once crippled by international sanctions, has made a stunning comeback. Today, its smartphones rival or even surpass the iPhone in camera quality, battery life, and innovation, winning over millions of new users both in China and overseas. The phrase "made in China" has transformed. It's no longer just about affordability. It's now a mark of quality, reliability, and cutting-edge innovation. Chinese engineers and designers are pushing boundaries in every field, from consumer electronics to green energy. Chinese companies have moved from imitation to setting global standards, investing heavily in research and development. Their products are now benchmarks for quality and performance, influencing trends worldwide. Western brands can no longer rely on legacy or reputation alone. They're being forced to innovate faster and offer more value just to keep up with their Chinese counterparts. Chinese firms are now fierce competitors in nearly every sector, from smartphones and electric vehicles to artificial intelligence and e-commerce. Their ambition and speed are unmatched. This seismic shift is driving down global profit margins and forcing Western companies to rethink their strategies. The competition is intense, and only the most adaptable will survive. For investors, ignoring the rise of Chinese tech is a costly mistake. The smartest money is now flowing into Chinese innovation, as these companies continue to disrupt global industries. The world's economic center of gravity is shifting east, with Asia, and especially China, at the heart of this transformation. The future of business and technology is being written here. China is no longer the world's factory. It's becoming the world's innovation engine, driving progress and shaping the next era of global growth.